Hello everyone, it's Friday, October 31. Today we analyze the charts of the euro and British pound to identify potential market trajectories. Yesterday, the euro faced continued pressure, despite relatively upbeat GDP growth data for October in the euro area and the European Central Bank's monetary policy decision. The currency struggled to gain ground. The ECB opted to keep interest rates unchanged for a third consecutive meeting, signaling that inflation is under control while the economy continues to expand. The deposit facility rate remained at 2.0%, and policymakers once again refrained from providing hints about future moves, indicating that the next decision would rely on the latest data. This cautious approach is echoed by the Federal Reserve. However, the difference is that the Fed has cut interest rates for a second straight meeting, citing slower employment growth. Meanwhile, the ECB maintains a more conservative stance, but this has not bolstered the euro, as reflected in the trading chart. Demand for the dollar persists, especially following a US-China trade agreement regarding fentanyl and rare earths. Many market participants are betting on resilience and stability in the American economy rather than the EU. Similarly, the British pound slid against the dollar yesterday. Sterling has been in a downtrend since the start of the week, so this pessimistic market reaction comes as no surprise. Now, let's take a look at today's macroeconomic calendar, which features key data on German retail sales projected to have increased by 0.3% in September. However, since this data reflects the previous month, it is unlikely to significantly influence market sentiment alongside the forthcoming figures on German import prices. Traders are more likely to focus on consumer prices in France and the euro area. French inflation is expected to rise by 0.1% in October, while the Eurozone Consumer Price Index is estimated to hold steady at 2.1% in October, down from 2.2% in September. Core inflation in the Eurozone is projected at 2.3%, consistent with levels seen since May, following a minor increase to 2.4% in September. Overall, these projections align with the European Central Bank's position stated yesterday. This suggests that the data will have a limited impact on the currency market. As for US statistics, traders will be watching the Chicago Purchasing Managers Index and data on new home sales, although these reports are not expected to cause significant market shifts. More attention is likely to be directed towards statements from Fed officials Raphael Bostic, Lori Logan, and Beth Hammack, who may offer insights into the future policy direction of the US Central Bank. If they raise monetary policy issues, we could see an increase in market volatility. In addition, it is important to note that today marks the last trading day of the week and the end of the month, which could set the stage for a slight bullish correction in risky assets. Turning to technical analysis of the EUR-USD pair, a false breakout at 1.1579 would generate a sell signal, potentially dragging the euro down to 1.1550. A break below this level could bring the price down to 1520 and likely open the path toward 1.1489. At this mark, I would recommend going long on a rebound, aiming for an intraday correction of 25-30 pips. Long positions at 1550 and 1520 could be considered if a phase breakout occurs. In a bullish scenario, if the price breaks through and consolidates above 1579, the euro could climb to 1610, making it prudent to go long on a false breakout there. In the event of a steeper rally, long entries on rebound could be considered at 1.1636, targeting a 25-30 pip move. Speaking of the pound-dollar pair, A false breakout at 1.3174 would create a selling opportunity, pushing the price down to 1-week low at 31.19. A break below this level would drag sterling down to 1.3075 and possibly pave the way for further losses toward 30.32. A false breakout at 31.19 or at 30.75 would trigger a buy signal. Long positions on the rebound would be relevant at 30.32, expecting an intraday correction of 35.40 pips. The main target for bulls is 31.74. In the event of muted selling activity, a break above this level would lead to a bullish correction to 1.3216, likely opening the way to 32.45. At this level, I would recommend going short on the rebound in anticipation of a 25-30 pip move. Going short at 32.16 and 31.74 would be attractive only after a false breakout. Good luck to everyone. Have a great weekend.